time for our quarterly chat with the top management of TCS, and with great pleasure let me now introduce and welcome the CEO and the CEO gentlemen. Thank you for joining us. Now Rajesh, what is the right way of looking at numbers for the quarter gone by? A quarter where volume growth was impressive of about 3.5%, or a quarter where margins have dipped and profit has dipped and EBITDA has come down? I frankly don't remember when was the last time there was a sequential drop of 5 or 6% in your EBIT and about 8-9% in your PAT.
Okay. So the way to look at it is, as you rightly characterized it, it's in a challenging environment. It's a very steady and a very impressive growth on the volume side, and 2% constant currency revenue growth is also very good. And if you look at it across our vertical industries in major markets, actually other than BFSI and retail, all other verticals have grown at more than 3.5%. Even BFS and retail have clocked in more than 2%. So I would say from a growth perspective, it's a very encouraging quarter. Definitely weaker than a typical Q1, but in the overall scheme of things, a very encouraging quarter. The way to think about margin is, I would characterize it as steady margins, because there are two elements that are impacting margins this quarter. One of them is cyclical, and which happens every Q1, and that we typically do wage hikes, and the impact of wage hikes is usually in the range of about 200 basis points. Okay. As a company, we had announced it last time also, and we reiterated. We decided to go with wage hikes with effect from Q1. So our Q1 number bakes in the full impact of wage hikes. But given the overall environment, we moderated our wage hikes from 8% average last year to about 5 to 6% average this year. So instead of a 200 basis point impact, the wage hike has impacted us by about 150 basis points, or a 450 crore impact on the margin line. The other one is an 80 basis point impact on the currency, which is really something that we can't predict on. So if you take these two one-off factors aside, at 25.7 we are fairly constant on it. Usually Q1 is characterized by us trying to get back from a productivity perspective 20, 30, 40 basis points in. So we try to kind of moderate the impact of the wage hikes. This quarter we have been, it's a quarter where we are focused on transition. We are focused on stabilizing our operations. We have gone through a fair, I would say incremental but important changes on our service practices, on our industries. So I'm very happy with the way the transition is going. We have also been traveling extensively, meeting with customers, reassuring them about the leadership position. The management team is very stable, but really the focus is on stable transition and positioning us for the future growth. So within that context, incremental productivity is not the focus one, and maintaining stable margins, less the wage hike impact and the currency impact, I'm quite happy with where we are, and that's the best way to think about it. And end of the day, the other element to look at it is cash conversion. So cash conversion at 103.9% of net profit continues to be strong. We generated about 6,300 crores or 6,100 crores in this quarter. Right. Paid out quarterly dividend of Q4 dividend of another 6,100 crores and another 16,000 crores of the buyback impact. So overall, from revenue, margin, cash perspective, I would characterize it as a satisfactory quarter and a stable one.
Okay, so I'm just going to spend 1 or 2 minutes trying to clear the air on the margin. You are still maintaining that old margin range of yours of 26 to 28. There is no reboot to that. Let's clear that.
Yeah, absolutely. We are committed to getting to that. And we
is
need
that
to
an
find
aspirational number, or that is an official guidance?
It is not an official guidance,
okay,
but it's a range that we, as we said, we are committed to working towards. And we need to, wherever we are, we need to find a path to it.